Welcome to Money Majlis, the podcast where finance, innovation, and impact converge. I'm your host, Suvo Sarkar. In every episode, we explore the ideas shaping the future of money, from the rise of digital economies to the reinvention of capital in emerging markets. And today's guest stands at the center of that transformation. Noor Sweid is the founder and managing partner of Global Ventures, a UAE-based venture capital firm investing in high-growth startups across the Middle East and Africa. She has led one of the region's first billion-dollar IPOs, exited multiple companies, authored a landmark book on entrepreneurship in emerging markets, and built a portfolio that touches everything from healthtech in Cairo to fintech in Lagos. In this conversation today, we explore what it takes to scale meaningful businesses in uncertain times, why Series B remains the missing middle, how AI is reshaping sectors beyond the headlines, and what global investors often get wrong about frontier innovation. It's a story of capital meeting conviction and of venture as a tool not just for return, but for relevance, reach, and resilience. And as always, through our Money Majlis gift card, this episode helps power causes that matter, because we believe meaningful conversations should create meaningful change. But first, a message from my sponsors.
Money Majlis is proudly supported by Aqua Now, the premier crypto-as-a-service provider, now building in partnership with the top financial institutions in the Middle East. Discover more at aquanow.com.
Money Majlis is brought to you by E&, a global technology group.
Money Majlis is brought to you by Intellect Design Arena, driving digital adoption in banking and insurance.
Money Majlis is brought to you by Live Digital Bank, powered by Emirates NBD. Trust and innovation combined.
Money Majlis is brought to you by Network International, the leading digital payments technology company in the Middle East and Africa.
My guest today is Noor Sweid, the founder and managing partner of Global Ventures, a UAE-headquartered Series A-B venture capital firm with sizable operations across the Middle East and Africa. Under her leadership, the fund manages around $400 million in AUM and has completed 60-plus investments in 3 different funds across 10 emerging markets, positioning it as a top-decile VC in MENA and Africa. Noor has previously held the role of Chief Investment Officer at the Dubai Future Foundation and was a founding partner of Leaf Ventures. Noor is also recognized as the first woman in the region to lead an IPO. She scaled her family business, DEPA, from $60 million to $600 million in revenues and listed it on Nasdaq Dubai and the London Stock Exchange for around $1.1 billion in April 2008. An entrepreneur at heart, Noor also founded Zen Yoga, MENA's first and largest yoga chain, which exited in 2014. She currently chairs the Middle East Venture Capital Association and has held several prolific board positions, including Global Private Capital Association, TechWadi, and the Carmen Fellowship. She's been named among Forbes' world's top 50 women in tech and Arabian businesses' most influential Arabs. Noor holds dual degrees in finance and economics from Boston College and an MBA from MIT Sloan. Fluent across fintech, healthtech, agritech, and enterprise tech, she is committed to supporting mission-driven founders from emerging markets on a path to global scale. Noor, welcome to Money Majlis. I'm so glad to finally meet you in person and host you on the show. Where did you just come back from?
Thank you, Siobhan. Thank you for having me here. I travel quite a bit. We have quite a few LPs abroad, but also a lot of our founders scale globally. So working on partnerships that can support them.
And where was your last destination?
I was in London.
You were in London. Is that one of your favorite cities?
I grew up there, so it feels like home.
Absolutely. All of us love London, and my daughter lives there, so it's a special place in my heart for London. Noor, you had a career that defies categories, from scaling an interior contracting firm to a billion-dollar IPO, to founding a wellness company and now leading a global venture capital firm. What's the thread? What's the common thread that connects these chapters for you?
I think there are two things that matter when I take a look at what's next or what am I doing. The first is that it is aligned with kind of flow and mission and purpose. So the interior contracting firm was one that my father had started. It was a family business, and that was meaningful. Yoga has always been an integral part of my life, and there was nothing I could find here. And so the mission was there to build something that mattered. I started my career in biopharma because I think that health and wellness are really important. So it all is something important. Today, the mission, the flow, what's important to me is really enabling founders to have access to capital in this part of the world. So when I take a look at founders globally, last year the world had $288 billion in venture funding. We as MENA had $2.4 billion.
Okay.
So less than 1% of global venture funding is now in the region. But that's a big improvement because when I started the firm, we were at 400 million.
Wow.
So 6 times in almost 8 years.
Yeah.
So you take a look, and what I really care about is my energy and my effort is going towards just solving problems that matter.
But Noor, switching from a founder to an investor often shifts how one views risk, people, and growth. How did your mindset evolve as you moved from building businesses to backing them?
So I don't think of myself as an investor.
Okay.
I'm a founder of a VC firm. So I'm a VC founder.
Okay.
And my product is the fund. Right. So if I want to be a really great founder, and the firm has top decile financial performance globally across fund 1 and 2 on every metric, DPI, TVPI. So you take a look and you're like, the product has to be the best product if the company's going to win. So the company, which is the firm, is what I founded. The products are the funds, and the funds are comprised of investments. So when I think about it, there's really 3 jobs in one. The first is you have to be a great investor. I've been angel investing since 2008.
Yeah.
You can start pattern recognizing, picking founders. So the investing's always been in my DNA. It's something I've always enjoyed since I studied finance, and across markets. So there's 3 roles. The first is you have to be a good investor, but anyone can be a good investor. The second is you have to be a good fund manager, which is about portfolio construction, risk management, exit discipline. We've had 6 exits in the firm. And then the third is you have to be a firm builder. Right. And so the firm builder is where I spend most of my time as an entrepreneur, an operator, building the firm, the team, the brand, the mission, ensuring we're surrounded by just the best people. And then, writing a second narrative for the region. And then the products are the fund, and the fund management is very different to firm building. And then investing is very different to fund management.
But not every VC founder, Noor, has founded companies himself or herself in the past. The fact that you've done that in the past must be a big advantage for you and for your founders.
Well, it allows me to think of firm building rather than just investing in fund management. But also, for the founders, it's huge. So all of the partners in the firm come from operating backgrounds. I think it's imperative if you're helping someone manage their P&L, manage their cash flows, thinking about product market fit, thinking about scaling and marketing. For me, you probably have a lot more sway if you've done it before. So I think that that's very important.
And how much time do you spend on mentoring the founders of these various companies you fund?
As much time as they like. So that's the job, is not just to invest, but actually that coaching, that mentoring. And what we've managed to do at Global Ventures is build out a value creation framework that can scale, a proper one, not just talk. And it's 7-layer framework. It's a 100-day plan once we invest to really up every level of governance for the company. So processes and governance, of team building, of PR and reputation. So we have a 7-layer framework that we've been working on now for 6 years, that all of our 70 companies have gone through, that actually London Business School is now writing a case study about how this is a really good way, if not the best way, to do value creation as a VC.
So your schematic is now a case study in London Business School?
It's becoming a case study in London Business School.
Congratulations. Will you teach that yourself?
Yes, I'll be there next Friday to teach it.
Oh, wonderful. That's giving back in a really good way.
Yeah.
Congrats on that.
Thank you.
Your firm, Global Ventures, today spans 10 countries in multiple sectors. What tells you, Noor, a founder or a company is global ready, not just for funding, but for scaling with intent? How do you choose your startup founders? What qualities do you look at?
I think you have the classic qualities that are like resilience and perseverance and product market fit for the company and so on. But I think that founders are unique in that their job is probably the hardest job. You have to hear no 20 times for each yes you hear. And so it's not just about resilience and perseverance. It's about how badly do you want to solve the problem you're out to solve. And that answer needs to be very, very, very badly, because you're going to get up most days and it's going to be very miserable. And by the time you get to when it's great, you would have given up 100 times unless you're desperate to solve the problem. And then coupled with that is how attached are you to your solution? And the answer cannot be very attached. Because you need to have founders that are married to solving the problem, but unattached to the solution. The solution needs to be able to pivot depending on how the market pivot, how technology evolves, and all these other factors. So I think that those are always the two things. And I always say, when we take a look, we have to love the market. So we have to have full conviction that this is a growing market in the right direction. We have to love the founder, right? But you have to like the company. Because the company can change many, many times until it finds that scalable solution that it's looking for.
Is it fair to say then that you back the founder, not the solution? That's what you do?
Definitely. And I think COVID proved that, because in companies in the portfolio where we had, liked the founder but backed the company because we liked the company or the solution, those really struggled when the markets changed so suddenly. Right. And companies where the founder was able to pivot and change meant that all of a sudden, it wasn't a problem. We changed the company. The founder was able to do that. So that really proved the point of you back the founder and then the company will evolve with the market.
And what's your ratio, Noor, of backing a company? How many do you see and evaluate before you choose one?
So we see about 600 every quarter. We invest in one.
Oh my God. So this is 1 in 600.
Yeah, so it's about 1 out of 600.
Okay.
Yeah.
That's a tough ratio to go through.
It's a very large entrepreneurial space in the region, and there isn't that much capital.
Okay. So you get the best, basically, right?
We're very lucky in that we get to work with founders that we really enjoy working with.
Noor, you talk a lot in your writings about the Series B gap. And you talk about Series B gap being a stubborn hurdle across emerging markets. Hundreds of startups raise seed capital in the region, but very few break through. In your mind, what are the structural reasons for this gap? And how does your fund approach it differently?
So I think it's part of the evolution of the ecosystem. But now the ecosystem needs to make another step change and evolve further and close this gap. We had a similar gap in Europe 7 years ago, where we were able to, as a VC global ecosystem, to take a look and say, oh, look, there was a gap, and you had Notion, Boulderton, Excel, amongst a few others, raise funds specifically focused on that gap. We try to quantify this gap here. So we take a look and we say, for every dollar we put in seed, how many dollars are we putting in Series B? Right? And that gap between what we should be putting in Series B on an equivalency test, if we want it to be the same as Europe on a ratio, or the US, is somewhere between $1 and $1.1 billion annually. Last year with the US, it was 900 million. So it's actually growing as a gap, ironically. And when we take a look as to why is that the case, because the ecosystem is still young. You have quite a few Series A funds, and they can write checks that are up to $5 or $10 million as a result of the size of the fund. So our third fund, which we closed at $185 million, is one of the larger Series A funds in the region, if not the largest. And so we can write checks that are up to $15 million, but that becomes the largest venture check that any founder can find. And then you take a look, and there's many 50 million plus tickets. So you take a look, and those come from the sovereigns, from families, family offices, and international investors that want to invest at a later stage because it's very de-risked. And those look more like private equity. When founders go to raise $20 million, they're stuck in the middle. And we've seen this, as I mentioned, in Europe. We've seen this in other places. So it's a normal evolution. It just means that you need larger VC funds. You need a $300 or $400 million fund to focus on this, which is what we saw in Europe historically. And those grew in Europe. So that's where the ecosystem needs to go. It's important for the ecosystem to evolve and fill this. And I talk about it being, there should be a continuum of capital from seed all the way to institutionalization. Without this gap, you can't get to the $50 million ticket, and you can't get to your pre-IPO and your IPO and your liquidity events. And so it really is a challenge. Today, when founders go to raise Series B funding, rather than it takes 3 or 4 months, especially given that they have great traction, strong unit economics, usually they're profitable, it takes them up to 9 months.
Really?
And it takes 7, there's an average of 7 investors in a Series B round, which is not great because it means no one actually owns the round and runs with it and supports the founder the same way as if it's 1 large and maybe 2 small investors. So that's where we are today. I think it'll evolve. Us as a firm, we occasionally do Series B, so we have the capacity within each fund to do maybe 2 Series B investments, but not at a 20 million size, at a 15 million size or a 10 million size. But now we are in market to raise a fund that is focused on Series B.
So your next fund is a Series B fund?
Our next fund is a Series B fund
And if you
that
look
will
at-
write $20 million tickets.
Okay. And if you look at your entire $400 million today, roughly what percent would be Series B?
Maybe 10%.
Okay.
10 to 15%. We've been focusing on A. But we have out of that 4 unicorns. And we are going to likely see the first IPO out of the portfolio very soon.
Wow.
And another one next year. We've had 6 exits. So when you take a look at how much traction, our portfolios combined, funds 1 and 2, because fund 3 is still early, funds 1 and 2 have raised $2.4 billion in subsequent funding. So it exists. It's just painful and largely international.
And your investors are individuals, institutions, family offices, a combination of all of that?
All of the above.
Okay.
All of the above. About half our capital, just over half of our capital comes from Europe and the US.
Okay.
And just under half is from the region.
Are you seeing increasing interest in the region from Europe and the US?
Indeed, both into the fund and into the market. So last year, 52% of venture funding in the region was from outside the region.
Okay.
So that's in the market. And then in our funds, we have an increasing amount of appetite from particularly family offices that are international that want access to regional growth and specifically tech.
And when you started 8 years back, what would the ratio have been?
It was about half-half. Okay. My first 10 investors in Fund 1 were not from the region.
Okay.
So they were people that had been doing venture for a long time, mainly in the US, and had done some other emerging markets and could pattern recognize and say, oh, we saw this in India 10 years ago. We saw this in Latin America 5 years ago, right? So this makes sense. And they invested. And once we had a lot of that traction from very sophisticated VCs globally, then the region started paying a little bit more attention to what was happening here as well.
And is that 50-50 split unusual for you compared to other funds? Or
Yes.
is the region generally like that?
No, it's very unusual for us.
And if you look at the region, what would that percentage be in your mind?
I don't know for sure, but it's I would reckon from market noise that it's probably 20% or 10% international, and the rest is regional.
Right. So your focus has been a lot more being global than being regional.
On the capital side, on the investing side, we only invest regionally. Yeah.
That's essentially Middle East and Africa.
Yeah.
No Asia in this.
No.
Now, Noor, you've backed companies across healthtech, fintech, agritech, and more. How do we assess a startup's potential in sectors where infrastructure regulation is still catching up? It's not yet firm. How do you assess a viability of a company in those circumstances?
So, in our view, that is the investment opportunity. Right. So when we take a look at the region, 8 years ago, we were 85% unbanked. Now we're 52% unbanked. I can guarantee nobody built banks. Right. So that was how fintech is coming in. And when fintech came in, to your point, regulation's catching up, but regulation's on the side of technology because you are building a new industry. You are not replacing or improving an industry. There are no industry incumbents. There is no regulation. So if you can work with the regulator and say, I'm going to use the world's best tech to build a tech-first industry for you, that solves your massive problem, there's no conversation that starts with, well, this is the way it's always been done, right? So it's really about how do we do this together. The same with health tech. When we became quite health tech focused about 5 years ago, we identified that there's 1 doctor per 1,000 people in MENA. There's 0.2 doctors per 1,000 people in sub-Saharan Africa.
Okay.
In Europe, there's 4.5 doctors. So that discrepancy is similar in number of hospital beds and clinics. So you get to a point where you say, wait, you're never going to have enough doctors or hospital beds or clinics. So how do you use tech to close that access to care gap? And you work with regulators to enable telemedicine, to enable pharmaceutical delivery, to enable diagnostics remotely. So you start to think through, we can use tech to build this industry. There are no incumbents. Today, we see the similar thing with supply chain tech, where we're doubling our manufacturing as percentage of GDP in the region. No one's going to build manufacturing of 90s style. It's all going to be additive manufacturing, 3D printing. How do we get ahead? And similarly with agritech, we still import 85% of our food. As we build our agriculture industry to cater to our populations, what does that look like? There are no industry incumbents. So you can work with the regulator to say, how can I help? Right? Here's the tech. Here's what I want to build. How do we work together? So that's where really the opportunity lies, is in working with founders that are regulator friendly and working with regulators that are friendly towards founders and pulling them together to say, let's help solve this problem by building an industry that is tech-led.
And how has the experience been with regulators across industries in the region?
It's been fantastic.
Yeah.
So I think if you approach it with, you as regulator, we want you to work with us so that we can build the best infrastructure around building this industry to grow the economy, you can have a wonderful conversation.
Okay, and given that you're talking about new technologies, AI has dominated venture capital funding headlines. $25 billion just last year alone globally. Where do you see real deployable AI solving critical problems in this region, in the markets that you invest in?
So we see it across all sectors. We're seeing it in health tech first. So we're seeing, one of our companies, Al-Tibbi, started as a WebMD for the region and then became a telemedicine platform, pharmaceutical delivery. So they just built the first Arabic LLM for healthcare. And obviously they have the data over the last 15 years for the largest medical content data in Arabic across the region. So taking that and building on top of that was much easier for them than a new company coming in and saying, hey, I'm going to build this. With what data? So industry incumbents or tech industry incumbents that are leveraging AI have been the ones to win first in the region. We're also seeing it in fintech, where we're looking at investing in an AI-led company that works with RMs and private banks to enable the RM to be online even if they're not online, and to chat with their clients and to be most updated on what the bank has to offer. You come from this background, Suvo, so you know exactly how that could enable. And then we're taking a look at it also from a pure translation and UI interface side.
Okay, so lots of AI startups in the region.
As enablers.
Yeah.
So we look at how is AI an enabler of growth rather than we want to invest in the deep tech AI.
Have you done deep tech investments?
We have. We did a very good cybersecurity investment in the past. We've just done a tech bio investment. So we do quite a bit of deep tech in terms of quantity of deals.
Just shifting gear, Noor, in your new book, Coming of Age, which I just ordered on Amazon today, it was included in JP Morgan's Summer Reading List 2025. Congratulations.
Thank you.
You have profiled 35 regional pioneers driving transformative change in some of the world's, I would say, most complex environments. What did these stories reveal to you about the emotional and cultural traits that are needed to succeed beyond the fabled Silicon Valley?
Yeah. It's very different to build companies here than Silicon Valley. So the book goes through 35 founder journeys. It starts with what I call the originals, which are some of the original founders. So Mudassir from Kareem, Ronaldo from Souk, and everyone is very kind to contribute their time and their insights. And then I go into something that I call the adversity advantage, which is when you're building in such complex environments, you're building companies that are sturdier because they have to be in order to survive, that are usually more efficient. I mean, even as Series A investors, we have 25% of our portfolio is EBITDA positive, which is unheard of anywhere else in the world. But here the founders want to, and they have to from an early stage. And then you're building in an ecosystem that, to your question, emotion and culturally, is much more collaborative. Right? So it's small, it's growing. Everybody has to lean on everybody else. So when they started, there were no financial solutions. There was no online payment. So you had to build that out, and then you had to build logistics because we don't have street names. And so you just get to a point where you really have to collaborate, and you have to build your infrastructure as you try to build your company. And that's much easier to do in community. So as we think through collaboration, and I talk in the book very much about the fluidity of time in our culture, right? Rather than the tyranny of the timepiece, and
Correct.
kind of going back and forth, and what that means, and really our tribal culture and what that means. So there is a lot of cultural context in building in the region. You also don't have, like in Silicon Valley, 100 unicorn founders that are roaming around making angel investments and mentoring the new set of founders. You have fewer of those. And so how do you then build an ecosystem that does support founders the way that they should be supported? So that's how I looked at it. And then as we thought through sectors, and I looked at the book, I said, let's do some fintech and really explain why fintech's macroeconomically relevant for this part of the world. It's not just a cool tech to improve your banking experience. And so there's the macroeconomics meets the 4 or 5 founder journeys in that sector. And then the same for health tech, agtech, supply chain tech, and edtech. And then finally, we take a look at energy, crypto, and AI, and why we are on par with the rest of the world, if not leading, and then what that means going forward. But the most important thing, Suvo, was really, I tried, and I hope I did, to capture the personal journeys of these founders. That it doesn't read like a TechCrunch report on the company, but rather why they're doing what they're doing, what the mission is, why this is important for these ecosystems, not just as a tech investment, but really for the economy and the population.
And how would you rate the tolerance of failure in this region compared to the Silicon Valley?
The tolerance of failure has properly improved. So I would say 7 or 8 years ago, there was still this question on, is it okay to fail? I think now it's definitely okay to fail. I don't know if we embrace it, but I definitely think that people say, okay, well, it didn't work, just try again. But there is no, great, go fail, because then you'll learn and come back. And so I think there still is a little bit of a fear of failure, but definitely less prevalent than 7 or 8 years ago.
And talking of the environment for entrepreneurship, Noor, countries like Saudi Arabia, Egypt, and now the UAE are today actively shaping startup ecosystems with local mandates and public funding. What's your view on how government-led capital is influencing venture logic? Do you believe that governments and government bodies should babysit startups? Should deserving startups attract venture capital from angels and VCs like you do and not be dependent on the government?
I don't think it's fair to look at this with a regional lens only. So if you take a look at most of the very large U.S. companies, they were backed by DARPA or some other form of U.S. government funding. If you take a look at Europe, you have similar, whether it's in the UK where you have the British Business Bank, whether in Europe you have the EBRD, the EIF, the EIB. And if you take a look at VC funds, first-time funds in the US and Europe, 70% of their capital comes from government or pensions or endowments. So when I take a look at the region,
which we don't have,
I'm like, let's have more of this. So I think that it's interesting to see the different structures that get set up and their different methods and how they're trying. But it is no different than what the rest of the world has been doing for decades in order to build their technology entrepreneurship ecosystems.
And do you think it's working in the region?
When I started my firm, 7 years ago, there was zero funding for VCs from regional sovereigns. We were Mubadala's first investment, our fund one. And they first did that out of their European fund of funds, right? And before they moved it, once they got a mandate. We were ADQ's first investment, now Lunate, back then Adio. And we were PIF's second investment. Was our fund one. So I can tell you exactly how long the governments have been doing this here. It's about 6 years. So, they're very engaged in trying to say, how can we help build this ecosystem? And I think that is very important, because without the right government and sovereign support, it's hard to get any other support in the region.
Okay, this is a good time for a short commercial break. Please do support my sponsors, who not only support this podcast, but also fund the free gift cards that I give out as part of this show to support 6 regional and global charities. My guest today, Noor Sweid, has chosen to give her $1,000 gift card to the Global Fund for Women, which is the leading funder of gender justice organizations, initiatives, and movements worldwide, providing over $230 million in grants to 5,600 organizations in 175 countries. Great choice, Noor, and thank you. As a listener, you can get a free $50 gift card by visiting my giving website, give.moneymajlis.com, and then choose a charity where you want to contribute that gift card to. Thank you for your effort. See you after the short break.
The financial world is changing fast. Institutions need to meet the growing client demand for crypto financial services, but they need a battle-tested platform to build upon.
AquaNow is a leading crypto financial services platform, powering incumbent institutions to launch crypto brokerage, payments, and remittance services for their clients, securely and at scale.
Be part of the transformation. Visit aquanow.com today.
The end touches your life.
In more ways than you can imagine.
You want more tech,
More speed.
more convenience,
more entertainment.
more business solutions,
EAN gives you all that.
and so much more.
EAN. Go for more.
Parents teach their children to talk, to walk, to ride, to read. So why not teach them about managing their money? Introducing the all-new Live Light app, designed to teach 8 to 18-year-olds good money habits. A free and totally secure app designed for them that's always under your control. Top up their cards, set limits, assign tasks, and reward them with allowances. Download the LiveX app to open a Live Light account in minutes, and the first 50 dirham allowance is on us. Visit live.me today. Live Digital Bank by Emirates NBD. Trust and innovation combined. T's and C's apply.
Money Majlis is brought to you by Intellect Design Arena. Intellect drives digital adoption in banking and insurance. Leverage emac.ai, the most comprehensive, composable, and intelligent open finance platform for banking and insurance transformation. Intellect Design Arena.
The end touches your life.
In more ways than you can imagine.
You want more tech,
More speed.
More convenience,
more entertainment.
more business solutions,
EAN gives you all that.
and so much more.
EAN. Go for more.
Money Majlis is brought to you by Network International, the Middle East, and Africa's digital payments champion. We make business happen and economies prosper by simplifying commerce and payments. Trusted by over 250 banks, fintechs and telcos, and 130,000 merchants in over 50 countries. Bringing you tomorrow's payment solutions today.
In Money Majlis today, we are talking to Noor Sweid, the founder and managing partner of Global Ventures. Noor, you've shared stages from Davos to London Business School, speaking on the rise of emerging markets. What are the most common misconceptions you hear from global investors about the region that we operate in?
I think that there's quite a few. The first, and for me, foremost, given the industry I'm in, is that the region has no innovation, that it's just emulation, right? And it's copycats.
Yeah.
We take a look at our portfolio, and it's about half-half. We have about a dozen companies in the portfolio that have more revenues globally than regionally.
Okay.
And they're all based here. When we invested, they were here. So when you take a look, you say, no, there is real innovation. We are able to leapfrog. We're able to do fantastic things, especially in the absence of industry incumbents and unfriendly regulators.
Yeah.
And I think that's the biggest misconception. I think the others is that there's no talent. Right. So we have, I believe, some of the world's best talent here, not just in Dubai, which is kind of winning the war on global talent, but also across the region. And then I think finally there is this female gender disparity that people believe exists more acutely here than abroad.
And is that correct, factually, the last point you made?
No.
No?
I think it's terrible everywhere. So, I think globally you have 2.2% of venture funding managed by women. So for every dollar that we've raised, a man has raised 50.
Wow.
Right.
It's a big disparity there.
It's a big disparity, and that's a global disparity. So I don't think it's any different here.
Let me flip the question. As an investor looking outward, which emerging countries do you believe are becoming the most vibrant startup ecosystems in the region? And what are they getting right?
Well, Dubai has been the fastest growing venture capital city in the world now for 6 years on a CAGR level. So I think as a city, Dubai is definitely just doing an amazing job.
Yeah.
I think of the region as three key markets, right? As MENA as three key markets. I think of Saudi as a really interesting market in and of itself. And when we take a look at investing in Saudi, usually it's Saudi founders building Saudi companies for the Saudi market. And that's wonderful. And they will win because they know what they're doing.
Yeah.
When we take a look at Egypt, which is 100 million people, it's usually Egyptian founders building in Egypt, owning their market, and then scaling into the UAE and Saudi. So they build regional companies really well. First, they own Egypt. They have a great cost base. They figure out the tech, and then they can compete with anyone. And then finally, you have the UAE, which is a very small market, but which really has managed to attract the best talent and best regulation. And founders here build global companies, and they build them global first. So they look at building in Dubai or Abu Dhabi and just capturing Europe or US revenues.
Because they have no choice. There's only 10 million population here, right?
They have no choice because of the small population, but also they are able to attract the world's best talent. Right. So they are able to get the best CTO to move here, the best engineering team. And so they're able to build the world's best team and attract, therefore, the world's top capital into the region to build the world's best companies. So I think that is a very UAE edge. So those are kind of the three different strategies across the region.
But Noor, talking of B2C companies, isn't it true that with the exception of Egypt, the region, Middle East, has limited population? I mean, Saudi is 30 million, Egypt is close to 100 million. But unlike Asia or Latin America or North America, there's not enough population for B2C companies to scale. Is that a constraint for your investments?
Definitely, but we from the beginning have been very B2B focused. So we are 80% of our investments are B2B.
Okay.
And there's two reasons for that. One is that what you mentioned is true if you take a look at physical borders.
Yep.
But we are the opposite of Europe. So Europe has no physical borders, but many languages.
Yeah.
We have many physical borders, but one language, especially if you're in business.
Interesting.
Right. So then you park the dialects because everybody uses the same classical Arabic for business.
Yeah.
So if you're building software or if you're building teams properly in business, you can start to take a look and say, wait, this is actually one market, give or take. And then you can go down having user interfaces and consumer facing, but your large business needs to be B2B. The second reason that we've always been B2B focused is capital efficiency.
Yep.
B2B companies are capital efficient. We can help them grow revenues. They can be profitable from a young age. B2C companies need tens of millions of dollars for marketing. And as we mentioned, the region's venture ecosystem doesn't allow for that.
Right, right. Now, just turning the page onto geopolitics, it's again front and center for everything we do, from wars in the region to an unconventional president, I mean, to say the least, in the White House. How are these uncertainties shaping how you assess cross-border capital flows and cross-border risks and founder mobility?
For as long as I can remember, we've had geopolitical uncertainty in the region. So it gets factored into what we do from the beginning. The irony is now we have geopolitical uncertainty globally.
Correct.
And so for us, it's nothing new. For others, it is new. We take a look at diversification across markets as the best way to mitigate risk. And so really we take a look at our fund lives are 10 to 12 years. I don't think we've ever had that long of regional geopolitical stability. So we really think about how do we overcome that by helping build businesses that can scale globally, that can maneuver, and that are diversified.
Okay. Would you agree, Noor, that the funding model itself is under pressure? I mean, we are seeing a surge in venture debt, fewer exits, and concerns over founder dilution. How is this changing your investment approach?
Again, when we take a look at the region, it's a bit of an anomaly. So last year we had 30% IPO increase over the prior year, which had 30% over the year before that. So there is a discrepancy between what's happening in the world with IPO markets closing, exits becoming less, and then the region which has these things continuing to grow. I think it's partly a factor of demographics, that we are 450 million people, half are under the age of 30, companies being built. There's lack of many industries, as we talked about. So it's not that you're trying to improve credit, it's that you're just providing credit. It's not that you're trying to improve healthcare, you're just providing healthcare. So I think those are fundamental changes in the way that we think about regional exits, regional build, regional IPOs. I think the business model of venture is changing. All business models are changing, but I actually think it's becoming increasingly relational, right? Because if you can find all the information you need on ChatGPT, then what you actually really start wanting is a guide, a mentor, proper advice, someone to understand you a bit better, and to help you think through your next steps. And doing that second and third level thinking of, if this, then what, is something that's more human and based on relationships. So, I do think the business model is changing, just not for the worse.
And we are lucky in the region that we are defying the global
Yes,
trends,
we're definitely
let's say.
defying all the global trends.
And as we head into the age of AI, DeFi, and quantum, what sectors or trends are you personally excited to back? Is it AI-driven operations? Is it climate solutions? Is it health tech? Is it financial infrastructure? Which ones are your personal favorites?
Right now, we are focused on supply chain tech and agritech. But I think if we take a look out 5 years, my two favorites are probably energy. I just think we're going to see so many changes in energy, and I think it's going to be grassroots upwards. And then the other one is really workforce management. So what does the future workforce look like? The future of work. I wrote a piece recently on LinkedIn that was really talking about how the idea of 9 to 5 and the work as we know it is about 100, 120 years old.
Correct.
Before that, for tens of thousands of years, we worked fewer hours a day.
Yep.
And seasonally, up and down.
Correct.
And so the idea of AI coming in to replace jobs and to take jobs away, in my head, I say, okay, but the reality is if we can go back to a 4-hour workday where you are in flow and doing things much more productively, or a gig economy that actually becomes a lot more officialized, because what was historical was a gig economy.
Yeah.
Right. So this whole idea is only 120 years old. So maybe this is the end of it, just like 100 years ago was the beginning of it. And we need to go back to the way that we were created, which is you are using your mind for 4 or 5 hours a day, right? And very productively and purposefully. And you can opt in and out of different things that suit you and that you can do better than anyone else because you're in flow there. And then we go back to a world where we have more time to be relational, more time in community, more time for family, more time to be human.
Interesting. Going back to gig economy, so to say, right? You've been recognized, Noor, as one of the most influential Arab women by Arabian Business. Congratulations.
Thank you.
What challenges have you faced as a woman leader in traditionally male-dominated industries? I'm sure you asked this question many times. And how have you overcome them?
Suvo, I just ignore them.
Yeah?
Yeah, I think that, what, if it doesn't serve you, let it go, right?
Okay.
And it's just like these criticisms and these thoughts of, well, yeah, but it's very male-dominated. You have to work twice as hard. Okay, so work twice as hard, right? Either you want it or you don't. To sit and complain about it is a waste of positive energy, a waste of your time, right? And just carry on.
And what advice would you give to aspiring women entrepreneurs in the region?
To do what they genuinely believe should be done. So to be mission-driven, to be aligned, and to dream big. I think women don't give themselves or ourselves enough permission to dream big. And I think that that's something that I would hope more women do.
Well said. Dream big. Noor, you've successfully transitioned from being an entrepreneur to an investor, now an author. How do you balance these roles while staying true to your passion for innovation?
I think there's innovation in everything. So I think being an investor and building the firm is innovation in the way that we've built the firm. I think writing a book about the region is innovation because that hasn't been done before. So for me, I think as long as it's tied to pushing the cause of regional founders forward, it suits the mission and it ends up being in flow. And that's all tied towards we can innovate, we can create, we can build.
Excellent. And finally, Noor, when you're not thinking about term sheets or scale-ups, where do you go to reset? I mean, given that you founded the region's largest yoga chain, Zen Yoga, do you practice yoga yourself?
I do.
Is that what keeps you sane and stable?
I think several things do. I think my yoga practice definitely is top. I exercise a lot, which I love. And then I do a lot of breath work. And I think that's very important, is my pranayama every morning.
Nice. I do the same, so I think we're on the same page. Noor, thank you so much for your time today on Money Majlis. I know time is money for you, but I trust you enjoyed our conversation. I definitely did.
Thank you.
And from cities be bottlenecks to the rise of AI and the shifting dynamics of regional markets, you offer not just a view from the front lines of venture capital, but also a lens into how long-term value is built across borders, sectors, and cycles. I think thousands of listeners will benefit from your words of wisdom and experience. I wish you the very best in your future ventures, pun intended.
Thank you.
Money Majlis is proudly supported by Aqua Now, the premier crypto-as-a-service provider, now building in partnership with the top financial institutions in the Middle East. Discover more at aquanow.com.
Money Majlis is brought to you by E&, a global technology group.
Money Majlis is brought to you by Intellect Design Arena, driving digital adoption in banking and insurance.
Money Majlis is brought to you by Live Digital Bank, powered by Emirates NBD. Trust and innovation combined.
Money Majlis is brought to you by Network International, the leading digital payments technology company in the Middle East and Africa.
And that brings us to the end of today's episode. At Money Majlis, we believe in conversations that do more than inform, they inspire action. Through our social impact initiative, today's episode also supports a cause close to our guest's heart, the Global Fund for Women. If you'd like to be one of the 50 listeners selected to give, visit givemoneymajlis.com to learn more. Money Majlis is conceived and scripted by me. It's produced by Sabine Achkar at Podster and supported by Aqua Now, Emirates NBD, E&, Intellect Design Arena, and Network International. My research partner is Ojas Sekri, and my giving partner is Good World. If you found this episode insightful, share it with a friend or colleague, rate the show, and subscribe for more conversations at the intersection of capital, innovation, and impact. Until next time, goodbye and ma salama. Stay well and do good.